For the first time since 2019, the S&P 500 and copper are no longer moving together, which RBC Capital Markets is attributing to the stark contrast between the US economy and weaker data out of China. For more on this, Yahoo Finance's Blikre joins us from the floor of the New York Stock Exchange. Hey, Jared.
Hi, Rochelle. It is no secret that the copper has really disappointed because China has disappointed this year. I'm looking at the Wi-Fi Interactive, a year-to-date chart of copper futures, and we can see the downtrend ended in May. But we are still having trouble just kind of getting off the dime here. And you mentioned the comparison with the stock market. I'm going to chart SPY, which is an S&P 500 ETF, alongside CPER, that's the US Copper Index Fund. Now, this purple line, which has gone up over the last few months, although it's gone sideways over the last few weeks, that is the S&P 500. That is SPY. Meanwhile, we can see copper just kind of languishing down by those lows. Now, let's compare that to a two-year chart where you can see them moving more or less in lockstep. Had that big dramatic downdraft last year, and here's that big up move that we saw in SPY this year. I would note that copper did bottom first, but overall the movements have been tightly correlated. So it's interesting to see when there's a divergence. We would either think copper will catch up with the S&P 500 or the S&P 500 will catch down. So we'll have to see how that turns out. Also want to check out small caps overall. This is going to be the Russell 2000 versus the Goldman Sachs Commodity Index. Now, the GSCI, that is in this cyan line right here, this peaked in 2022, while the bear market in Russell in small caps was just getting started. That was a bear market in all stocks. And you can see that the commodity index has been trending down, and it just broke out of this broke out of that downtrend, and we can finally see that it's trying to kind of stabilize, but we're just in the beginning stages though. We'll have to see how this works out. Now, one of the things that really is working in the favor of stocks right now and also commodities is the fact that volatility is going down, and we're also seeing a back off in the US dollar index. Here's the Dixie US dollar index, and you can see we have fallen off of these highs over the last few days after this very steep incline. It's not impossible for stocks and the dollar to climb in tandem, but it does make it a little bit more difficult. And the dollar is a headwind in everything, including multinational, a stronger dollar anyway, multinational corporations, commodities, even crypto. So a weakening dollar even helps the crypto trade guys.